Hi everyone, my name is piterpakulski. Today we'll start a new model. This will be a model of a financial model of a truck. If you find this video valuable, you may give us a like, subscribe our channel, share this video with your friends. Also, you can order a financial model from scratch for your unique business idea. We can help you with that. So today we'll just start talking about the revenues. I have an empty Microsoft Excel sheet. So let's start creating the model. First of all, you have to create the revenue generating algorithm that you will trust. Let's first of all create some kind of libraries for the years, months, statuses, on/off statuses. So where later when we will create the cash flow statement, we will be able to switch on and off different prices. So let's create. So this blue color will be throughout. This will be our rule.
So these are the years of projections inside our model.
Here are the months. Here we will place the status on and off. We will be able to choose one of these statuses when we will play with different scenarios. We will switch on and off different pricing, different types of revenues, and so on. So we will need this for that. So first of all, we have to talk about the revenues. So for our model, we will have, for example, 5 types of prices per mile. So for example, we'll have 5 types of prices per 1 mile. Here we will specify the price, the amount of the value of price per mile. So for example, we will place these values. Also, we will play with zero price. Then we will add on/off button for each type of price. We will use data validation. This is the input, so we color it with blue. Now we just convert on into 1 and off into 0 to make Microsoft Excel understand these statuses. Then we will use coefficient to price. So the basic coefficient will be 100%. It's like a 1. So now we will just add all these coefficients to price. This is the value of the price. This is on off button. This is coefficient to price. This is final value of the price. So for example, if we want to completely switch off this price, we will get 0. If we don't want to completely switch off the price, but we would like to see what will happen with financial efficiency, if we decrease the price on 50%, we will just use this coefficient. So here are the prices. Now we have to talk about the mileage. We will just take the typical here. And then we will specify miles per month. For our truck. Let it be, for example, 12,000 miles for the truck per month. Then we will have to allocate all these miles between these prices. So let's say that we will change the format of inputs here. Let's say that, for example, 30% of mileage will be for the price of $4 per month. Then, for example, 10% of monthly mileage will be for the price of $3. We'll create a total. Let it be like this, for example. So we just allocate how we traveled all these 12,000 miles. So for example, 30% of these 12,000 miles will be for the price of $4. 10% will be for the price of 12,000 miles will be for the price of $3 per month revenue. So here we just specify all this data. So what we will do now, we will just specify the mileage by pricing. So we will take this mileage. By the way, we can add a coefficient for mileage to make us able to play with it. I will add an additional line. So the basic value will be 1, sorry. All these coefficients are needed because when we will create the final version of the financial model, we will have to play with different inputs, and all these coefficients allow us to do it very easily. So we just take this value, multiply on this coefficient, because all entrepreneurs always want to play with all this data when they see the simple discounted payback period. So it is very interesting for them to see what will happen if that will occur. So now we will add coefficient to mileage. So the basic value will be 100%. So and now we will allocate 100% of mileage among 12,000 miles per month. So we will just take this value, multiply it on this value, now we will add on/off button, then we will add the mileage coefficient, then we'll press enter. And here we've created the month picture of how our truck gains the revenues. So what we can do, for example, we would like to, if we want to decrease the total mileage, for example, on 20%, we will just do the same. If we want to increase on 10%, for example, we want to switch off the price interval number 2. We can, without switching it off, we can for example decrease the mileage on 30% for the price number 2. So all this will be needed at the end of financial modeling, when financial model will be ready and we will face necessity to play with inputs. So we need all this stuff for scenario planning. So so now we are calculating the revenue. So we'll take these values, multiply it on the revenue plus coefficient, so this will be the revenue for our truck. This will be the total mileage of our truck. This is mileage. We will create the total. We will use this mileage for service intervals later, so this is very important values. These are the revenues. We will mark it with green. We will start working with them a little bit later. So in the next video we will create the timeline for our truck. We will specify when we start the operating activity of this truck. If you find this video valuable, you may give us a like, subscribe our channel, share this video with your friends. Also, you can order a financial model from scratch for your unique business idea. So see you next videos. Thank you and bye.